Dear students, now you know in this the discussion series of the theoretical part as which we have selected to do under the webinar session of the CA Sri Lanka, we have conducted the first part of that, which is covering the very initial theoretical part of the non-resident taxation. That's the first session which I have done by elaborating what in the webinar series what we are going to do, and then immediately we have shipped to the your 15% syllabus area, which is non-resident taxation. In that we have covered the identification of the first we have done in the non-resident taxation, what are the key aspects you should know as the SL3 student. Then in that, under the mind map, everything in a flow we have done. After that, we have looked into what is the assessable income of the non-resident person and the chargeability of the income tax of the non-resident person, and how to determine the residential status. Under section 69, we have completed with the Patrice questions. I think you can remember with reference to that under section 69, the residential status of the individual as well as the company, both we have looked into. That is the first part under the first session we have completed. Now again, this is the continuation of that same session. We are going forward till the continuation, till the end of the non-resident taxation and the international taxation. This is a continuation of this 15% of syllabus area. Today, the main focus is to go for one of the key section with reference to non-resident taxation and the international taxation, which is section 73. I may say it is one of the larger section in your act, with covering sources of payments of a person. Then we have to look at, for the non-resident person, if that sources of payment received, what's the implication? That's the main idea which I need to provide. This is the session 2 discussion of the non-resident taxation and the international taxation. That taking that 2 minutes, I have the reminder what we have done previously. Today, that is the one of the next step forward what we have stopped. Okay, then this is the theory session for your June 2021 SL3 examination. These are the 3 theoretical areas which I am going to discuss with you all. In that, we have started the non-resident taxation. This is the keep you all in line. This is the quick reminder. We have done the assessable income of a non-resident person under section 4. In that session 1, I have completed that. Secondly, resident person, section 69, which is under even in the session 1, I have completed. Now today, I am starting from the change of resident, section 70, as well as the key main topic of today, source of payment under section 73. That is under session 1, the session 2, the continuation discussion. Okay, now you have the understanding what are we going to do. Then this is theory session 2, continuation of non-resident taxation. In that, now all of you all know under section 69, we have determined the residential status. We have determined the residential status. Now next issue is, if the residential status has changed, what is the implication? It is covering under section 70. Why this is important? Because this is included in the sources of payment under section 73 also, which fortunately this has tested in your the one of the paper in the under the non-resident taxation. This concept has tested with reference to section 73, section 70 as well as link to section 39. Then therefore you cannot ignore any of these topics. These are really important. Okay, then going forward we will look at what is this change of residence covering under section 70. First let me explain the theoretical part, then after that we will go for the Patrice questions. Okay, in that, realization of an asset in case of change of residence. Now it's covering, the initial provision is in section 39. Can you remember section 39 of the Inland Revenue Act talking about the realization of assets and liabilities? In that, under section 39, there are 6 situations where the realization can be happened. Clear? In that 6 situation, the last situation, section 39 subparagraph F, covering realization under the change of residence. Clear? Now you should know why you have to learn this part. Why? Actually these are deeming provisions in the Act. This is not talking about that at the point of change in residence your all assets are realizing. No, but these are considered as realizing. Residentship එක change වෙද්දී realize උනා හා සමානව සලකනවා. These are deeming provisions. Then if such kind of situation has happened, there may be a gain. If there is a gain, that gain should be taxable. That gain should be taxable. That is the important point. Now in the section 70, 2 situations are given under the change of residence. We will look at one by one. Come to the first paragraph, which is how it comes. Now under section 39 subparagraph F, it's referring to the realization at the time of change in of residence under section 70. Then we have to look at if realized like that, what is the tax implication. That is the perspective. Come to this, the first paragraph, realization of an asset in case of change of residence, section 39. As per the section 39, which is realization, person who owns an asset shall be treated as realizing. See the word shall be treated. This is not actually happening maybe. It is talking about, this is a deeming provision. Treated as realizing the asset where the change of residence occurs as provided in section 70. Now you all know the one way of the realizing of asset is the change of residence. It covering, it's a realization provision is in section 39. Now we need to look at under section 70 how it impact to the non-resident person. Come to that. The first situation under section 70, which is covered in section 70 subsection 2, the non-resident person becomes resident in Sri Lanka, section 70 subsection 2. What will happen if so? Where a non-resident person becomes resident in Sri Lanka, the net cost of an asset held by the person immediately before becoming resident shall be equal to the market value of the asset at that time. What's the provision is given? It is given when the non-resident person becoming a resident, a foreign citizen, permanently. For example, I will take the individual example for your easy Patrice. In that sense, a foreign citizen is permanently coming to Sri Lanka, the rest of his life he is going to stay in Sri Lanka. Now the residentship is changing from one country to other country. Therefore, at that time what we have to do for the purpose of taxation in that person, immediately before change in the resident, the net cost of the asset of that person shall be equal to the market value of that asset. Then lamai, if such kind of the provision is there, gain equal market value of the asset minus net cost. Under that, market value and the net cost is same or different. It is same. Then the gain is 0. Come to this. That's why I have explained. That means gain is 0. Then we will go to the next change of residence situation. Situation where a person resident in Sri Lanka, the first part, person, a non-resident person come into Sri Lanka and being a resident. Now here resident person is becoming a non-resident person. Situation where a person resident in Sri Lanka ceases to be the resident in Sri Lanka. Tavaduratat, he is not a resident in Sri Lanka. Section 70 subsection 3 provision. We will come to the theoretical part. When a person resident in Sri Lanka ceases to be resident in Sri Lanka, the person shall be treated as having immediately before the person ceases to be so resident, realize all assets owned by the person. Again, these are deeming provision. We have to think at the point of change in the resident of this person who resident in Sri Lanka, change in his resident to another country, he becoming a non-resident person. In that sense, it's deeming provision, realize all asset owned by the person and deriving in respect of each an amount equal to the market value of the asset at the time of the realization. Gain, consideration minus, or a market value, the market value immediately before the person ceases the residentship, then market value minus cost, it is considering as the gain. But now section 70 subsection 2 provision, section 70 subsection 3 provision, all provision now we all know in a theoretical wise. Now there is an exclusion of this provision. We will come to that part. Exclusion for domestic asset, section 70 subsection 4. When calculating these gains, the domestic assets are excluded. Come to that. Above discussed two provisions. What are those two provisions we have discussed? Section 70 subsection 2 and section 70 subsection 3 shall not apply to an asset that is a domestic asset, to an asset that is a domestic asset if of the person immediately before becoming a resident or after ceasing to be resident. That means for the both. Immediately become resident mean non-resident person becomes a resident. After ceasing to be resident mean Sri Lankan resident ceasing his resident. That means resident converted to the non-resident. For the both situation, domestic assets shall exclude from this provision. Now you have to look at what is this so-called domestic asset. We will come to that. Definition of domestic asset, where it has mentioned in section 195 of that. What is the section 195? Interpretation. What kind of the interpretation? General interpretations. It is the prescribed under the alphabetical order of the each burdens in that particular section. Okay. Come to the definition of the domestic asset under section 195. An asset owned by a resident person. See definition of domestic asset in that para A, an asset owned by a resident person other than foreign land or building, or an asset held by a foreign permanent establishment of the person. Don't worry, what is this foreign permanent establishment? I will explain today's session. Or held by a Sri Lankan permanent establishment. SLPE and the foreign PE I will explain today. And interest in land or building situated in Sri Lanka. And shares in a resident company. D, a membership interest in a body if more than 50% of the value of the interest is derived directly or indirectly through one or more interposed bodies from land or building in Sri Lanka. This is the definition of the domestic asset. Then this kind of the domestic asset should be eliminated when computing gains from the at the point of change of residence. Okay. What are the domestic asset? The asset owned by the resident person with held by the Sri Lankan permanent establishment other than the foreign land or building which in the foreign PE, then interest of the land or building in Sri Lanka, that's mean ownership or interest in the land or building in Sri Lanka, the shares in a resident company and the 50% of the value of the interest if it is derived directly or indirectly, or one or more interposed bodies from the land or building in Sri Lanka. Lamai, this part has tested in your online examination, the December 2020 examination under the non-resident taxation. Therefore, these are actually important. Okay. Now you know there is a situation where the residentship can be changed. Then if change, what the two situations are there. In that, what is the exclusion is there, which is a domestic asset. We should exclude, you know the definition of the domestic asset. Okay. The next step is go for the Patrice Question 2, Lamai. Before go for the Patrice Question 2, let me explain the change of residence, which is more clearer to you all. Okay. We will come to this change of residence. Change of residence, which is covering under section 70 and the plus the realization section 39. Section 39, actually this, when it comes to this section 70, this section 70 more or less that section 70 subsection 2 and subsection 3 I will add, these are deeming provisions of the act. Deeming provisions of the act. We will have this explanation note on this. Now when it comes to change in of resident, the act is talking about two ways of the change in of residence. The first one is the non-resident person becomes a resident in Sri Lanka. Resident in Sri Lanka, which is under section 70 subsection 2. The second situation is the resident person I will add for easy reference, resident person, the permanently going outside Sri Lanka, resident person ceases his residentship. Okay, resident person ceasing or ceases as resident in Sri Lanka. That means resident person becoming a non-resident person. These are the two situations. I think it's clear to you all. Now we need to look at if something happen like this, what will be the tax treatment. Okay, when it comes to this part, it is talking about we need to compute the gain. When it comes to computation of gain, all of you all know how to compute the gain, consideration minus cost. In that, here it has given market value, it is market value minus net cost of the asset held immediately before becoming resident. Before becoming resident. Clear? Now in here, net cost of the asset immediately before becoming a resident according to section 70 subsection 2, if the market value is 100, the net cost of the assets held immediately before becoming the resident also 100, that means the gain is 0. Clear? Now the next part, resident person becoming a non-resident, in that gain equal to the market value of the asset, at the time of realization, minus cost. Then in that sense, if the market value of the asset at the time of realization, if this is 100, if the cost of the asset, if it is 80, there is a gain of 20. But when it comes to this, you should know there is an exclusion. When computing both of these calculations, there is an exclusion. What is the exclusion? The realization of any domestic asset cannot be considered. Exclusion is the domestic asset. When it comes to domestic asset, it is defined in the section 195. Clear? Then under this situation, how it I need to link this to section 39 also, then we will come to that. Why this type of a calculation we should do it is, I will take this again, the link to both of these provisions, it is calculating the gain on deemed realization of the asset at the time of change in of residence. R is for the resident. Change in of the resident. Where it has mentioned, it is under section 39 subpara F. Section 39 subparagraph X, which is covering 6 situations of the realization. In that, one situation is this. I think Lamai, with this explanation, entire theoretical part is clear to you. This is section 70 subsection 3 and this is section 70 subsection 2. Okay. Now, with this all understanding, we have to go for the question. That is the application part of this theoretical provision. I have taken 2 individuals when becoming a resident and ceasing the becoming a non-resident and ceasing the resident. The 2 situations, including the domestic asset example, we will come how it comes to the patrical application. Okay. Now, we will go for the Patrice question 3. Since this is the continuation of the each questions which we are discussing. Now, question 1 and 2 we have done in the session 1. This is the Patrice question 3. Okay. Come to the question, come to the requirement. Advice to Mr. Dale whether he is having any income tax implication in relation to realization of properties in America under Inland Revenue Act number 24 of 2017. Now, you have to provide a particular advice to the individual person by telling the income tax the implication on realization properties of his whatever his country, maybe at the moment of change in resident, what is the implication. Come to the details given. Mr. Dale is a citizen of America, and that is why requirement is asking the property held in America, what is the tax treatment in Sri Lanka. Okay. And he is an expertise on developing of villa projects. He has been appointed by Sri Lankan construction company as consultant on 1st June 2020 for the period of 4 years. However, he is having immovable and movable properties in America amounting to $2 million. The market value of these properties as at 30th May 2020 is $2.6 million. We will make a change here. Properties as at, can we take it as at 31st May 2020, because I have forgot there is the 31 days for the month of May. Then we will take this as a 31st May 2020. What is the market value? It is $2.6 million. Now, the examiner is asking, you have to provide advice to Mr. Dale with reference to this situation. What are the tax implications? By reading the question, first thing you have to identify what is this situation. First thing, the citizen, American citizen, change in his, or resident in America, change in his resident to resident in Sri Lanka. Why I am telling the change in of resident is given period of 4 years. He is going to stay in Sri Lanka for a period of 4 years. Can you remember under section 69, the individual being a resident in Sri Lanka, if I have directly go for the quantitative factor, the 183 days or more in a period of 12 months period, then that circumstance is fulfilled according to given information. Therefore, first thing you have to recognize, yes, due to this the job, Mr. Dale citizenship is, or residentship is going to change to resident in Sri Lanka according to the laws in Sri Lanka. That is the first thing. Second thing you have to think, okay, due to change of resident, what is the tax implication? That's only thing. Then this is the non-resident person becoming a resident in Sri Lanka. This is the implication. Gain, you should calculate the gain, the market value minus net cost of the assets held immediately before becoming resident. That's why the market value of the assets and the net cost of the asset given separately. It's very easy. The market value of 31st May has given, then the cost of the asset also at that date it has given. Therefore, the gain should be calculated market. Now, the provision, if we have gone for provision again, it is given net cost of an asset held by the person immediately before becoming resident shall be equal to the, not the minus, shall be equal to the market value of the asset at that time. Then lamai, this is really easy. Then it is the market value equal net cost of the asset, then the gain is 0. Okay, we will come to the answer. Answer for Patrice question 3. As per section 70 subsection 2, non-resident person becomes a resident in Sri Lanka. There is a mistake. The residential status of Mr. Dale is changing from 1st June 2020. Clear? Resident in America to resident in Sri Lanka. That's the situation. Therefore, as per section 39, which is realization, section 39, at the time of change in residency, the assets owned by a person other than domestic asset. Your answer should be in line with this. Domestic asset shall be treated as realized when the change of resident occurs. These are not actually, these are deemed in provisions. Then, however, for Mr. Dale, there is no any income tax implication on realization of assets because the net cost of an asset before becoming resident in Sri Lanka equal to the market value of that asset. Therefore, consideration, the market value of the asset at the time of realization minus is the same figure, 2.6 million minus 2.6 million of the US dollars, then the gain is 0. Okay. Net cost equal to market value, then in the question the market value is 2.6 million, it is equal to the net cost, then gain is 0. I think with this explanation and doing the question, it is clear to you. Okay. Then we will come to Patrice question 4, which is talking about the second situation. In that, what is a requirement? Advice to Mr. Lucky under change of resident whether he is having any income tax implication in relation to realization of properties under Inland Revenue Act. The same requirement we will see how it's going to information has provided. Mr. Lucky is citizen of Sri Lanka and appointed as consultant in Malaysian company for a period of 4 years with effective from 1st May 2020. For the purpose of staying in Malaysia, Mr. Lucky has purchased properties at Malaysia worth US dollars 250,000. He is having property worth of rupees 150 million in Sri Lanka. The market value of both properties as follows. Malaysia, Mr. Lucky has brought it to US dollars 250,000. Now it's US dollars 265. Sri Lanka, it's 150 is the cost, and now we can sell it to LKR 200 million. This is a situation, and it is asking what is the tax implication. Now lamai, here again I am going for the quantitative factor of the count in the residential status of this Mr. Lucky. In that, if he is in the 4 years period of a other country, then according to the section 69, he is becoming a non-resident. These are actually hypothetical examples can be happen. Then therefore, since this is a deemed provision, we need to look at what is the tax implication on this. Now, first thing is, yes, Mr. Lucky is going to the Malaysia for a continuous period of 4 years. In that sense, he is ceasing residency in Sri Lanka. Okay. In that, at that point, what is the tax implication? For this purpose, we need to compute the gain, which is market value of the asset at the time of realization minus the cost. Now, in that, what is the exclusion, Lamai? Domestic asset should be excluded. Mr. Lucky, is Mr. Lucky has domestic asset? Yes. What is the worth of the domestic asset? Cost is 150 million, market value is 200 million. Entire part, what you have to do? You should have to eliminate with the assumption of this is covering under the domestic asset, which is covering under section 195 of the interpretation section. Okay. Then after that, the foreign asset, it should be liable for this gain. Then we will come to the answer. In that, answer for Patrice question 4, as per section 70 subsection 3, the resident in Sri Lanka ceases to be resident. At the time of change in resident, it is treated as realizing all of its properties other than domestic asset as defined in section 195. At the gain of calculating as market value of such asset less cost of the asset. And I will add one point to this answer. If you write in this, please write. We will write this. It is assumed that all the assets mentioned under the LKR, the market value which is 200 million, it is covering under the definition of the section 195. Okay, done. Therefore, Mr. Lucky shall pay relevant income tax on deemed realization of his foreign assets in Malaysia. Then on that, under the US dollar value consideration minus cost consideration, that's mean a market value of the asset. Market value of the asset at the time of realization, it is 265,000, and then the cost is 250. Then there is a gain of the US dollars 15,000. This is the implication. Okay. Then I have taken these two examples based on the quantitative factor of the section 69 to you to explain what is the tax implication and excluding of the domestic asset, how it can happen. Okay, I think it's clear. Now, this is the end of the discussion of the change in of resident. Now, we are moving to the next very important topic, which is section 73 of the Inland Revenue Act, which is talking about the source of payments. Section 73. Without knowing this section, you cannot answer the non-resident taxation and the international taxation part. This is one of the important section which you should know. What are the sources of payment arising or derived on behalf of the non-resident person in Sri Lanka? Why it's important? Because under section 4, non-resident person should pay tax in Sri Lanka on source of income. Clear? We will come to this one. This section is very important from the perspective of taxation of non-resident person. This described what are the sources of income and how it will be taxed. Now, how it will be taxed part I will take separately with the discussion of the double taxation treaty, and I need to take the I'll discuss one treaty but not all the provisions lamai, but very important provisions or important articles I will take, and we will compare it with the what is the withholding tax provision in the Inland Revenue Act and what is the provision given in the treaty, and what are you going to apply for your answer even in the patrically, what is you are going to apply. Okay. Then how it will be taxed I will come to later. Now, main thing is what are the sources of income today we are going to look at from the side of non-resident person with respect to income derived in Sri Lanka. With respect to sources of income, as we discussed previously, we have discussed under the assessable income, there are 4 sources. Okay? Employment income, business income, investment income and other income. The same above, now Lamai, what I need to confirm, now what I need to communicate, even whether a resident person, whether non-resident person, the sources of income is same. The 4 sources are same, nothing other than that. Okay? Then the knowledge of these 4 sources of income is continually applicable for your non-resident taxation part also. The same above applicable to non-resident person in the income if the income is derived from Sri Lanka. Now, we will look at what are the sources of income which can be derived from Sri Lanka according to section 73. Okay. The following payments, see the provision, the following payments shall have a source in Sri Lanka. Shall have a source in Sri Lanka. In that, first one, income from employment, which is covering under section 73 subsection 1A. Payments received in respect of employment, Roman 1, to the extent derived in respect of employment in Sri Lanka, you can see the word wherever paid. Which country it has paid to me, it doesn't matter. I should be employed in Sri Lanka. Due to the fact that I have employed in Sri Lanka, I have received that payment, maybe country A, maybe country B. It should not be received only from Sri Lanka. Any other foreign country I can receive the payment, but what is the purpose I am receiving that the payment? The purpose is which I have the employed in Sri Lanka. Okay. The second one, if paid by or on behalf of the government of Sri Lanka wherever the employment is. If it is paid by the government of Sri Lanka, or if it is paid by on behalf of the government of Sri Lanka, then where the employment is, wherever the employment is, then it is source of payment. Now, now I am applying that to the non-resident person. If an employment income applicable to the non-resident individual, in that sense a non-resident individual has employed in Sri Lanka, very simply his employment, that is the income arising in or derived from Sri Lanka, it covering under the employment income, then therefore that income arising in or derived from Sri Lanka, it should be liable to pay, or that person should be liable to pay tax in Sri Lanka. That is the first part under the employment income, section 73 subsection 1A. Now we will come to next one, dividend income, section 73 subsection 1B. Dividend paid by a resident company. If now I am applying it to the non-resident person. If a non-resident person has invested in a resident company in Sri Lanka, from that the investment, share investment, if the resident company has paid the dividend to the non-resident person, it is the income has arising in or derived from Sri Lanka to that non-resident person due to his share investment in Sri Lanka. It is a source of payment with reference to the non-resident person. Therefore, he is liable to pay tax in Sri Lanka on that dividend income. We will look at what are the tax rates applicable later. First, we need to look at what are the sources of payment. Okay. Then C, interest, charges, annuities, a royalty, technical service fee or similar payments, section 73 subsection 1C. This is one of the section covering the lot of sources of income, interest, charges, annuity, royalty, technical service fee or similar payments. Now, interest, charges, annuity, royalty under investment income, you all know it's covering under the investment income in the assessable income part. A technical service fee is a may be specified fee, then or any similar payment like that, section 73 subsection 1C. We will see what is the provision. Interest, charges, annuities, a royalty, technical service fee or similar payment if Roman 1 paid by a resident person. Who is made the payment? Resident person, other than as an expenditure of a business carried on by the resident person through a permanent establishment outside Sri Lanka. Now, you can see Lamai from the Roman 1 provision, this is a excluded one, excluding a payment. This kind of the payment, first thing it has excluded. Excluded on what? Paid by a resident person other than an expenditure of business carried on by the resident person through a permanent establishment outside Sri Lanka. This is very simply talking about the resident person is making payments as the expenditure of the business carried out by that person under the foreign permanent establishment. Okay, it has other than, that means that part has excluded. Now, we will come to the Roman 2, paid by a non-resident person as an expenditure of the business carried on by the non-resident person through a Sri Lankan permanent establishment. If these things are paid under the Sri Lankan PE, yes, it is the source of payment. Now, you may have you should have a question, what are these permanent establishment outside Sri Lanka? What are these permanent establishment? That means Sri Lankan permanent establishment. First, after this section, we will look at that two the definitions. Lamai, these two definitions are very important. Don't forget. If I am telling anything to remember, if you can all the provision relevant to examination, yes, you should remember, but this definition of SLPE, I am not telling you to by heart, but it is in the Inland Revenue Act. Then go through that particular section and it's an open book referential, tag it, then it's when it is necessary in your examination, please use that, and you should know how important it for your examination. Now, we will see that. The interest, charges, annuity, royalty, this is a same section continuation. Now, the provision is this. We will see what are the definitions. The technical service fee, this definition has given in the section 73 section itself. It has not given in the section 195. This one has given in the section itself. Therefore, this definition only applicable to that section interpretation. Okay. Definitions in this section, technical service fee means a service fee for managerial, technical or consultancy services, including a fee for the provision of services of technical or other personnel. This is a definition of the technical service fee. It is understandable. Then we will come to the next very important definition. We are still in the section 73 subsection 1c. In that we are looking for the definitions given in that particular source of payment. The meaning of Sri Lankan permanent establishment defines in section 195 of the Act as follows. Put the asterisk mark, whatever you all doing your maybe self studies, maybe following lectures, anyway this is put asterisk mark in any in that thing. This is really important. Okay. Sri Lankan permanent establishment means, first thing, a place in Sri Lanka where a non-resident person carries on business or that is at the disposal of the person for the purpose and includes. That means this is the place situated in Sri Lanka. This is belongs to a non-resident person. He is doing a business or to do business at the disposal of that person. He has kept that a place for the doing the business. Includes, under that definition, these are the inclusions of the SLPE. A place in Sri Lanka where a person has or is using or is installing substantial equipment or substantial machinery. This is a PE. A place in Sri Lanka belongs to non-resident person conducting business where a person has or using or is installing substantial equipment or substantial machinery. Clear? B. A place in Sri Lanka where a person engaged in, see the activities given, construction, assembly or installation project for how many days, Lamai? For 90 days or more. If they are doing this, the particular employees are staying in Sri Lanka and project is going, project, which kind of project? Construction, assembly or installation projects for 90 days or more, including a place where a person conducting supervisory activities in relation to such project. Even if there is a foreign project of construction in Sri Lanka, then the non-resident person, a team of supervisors coming to Sri Lanka and looking for this project, they are staying in Sri Lanka more than 90 days in Sri Lanka. If it is so, this is under the category of this Sri Lankan PE. Okay. Then the C, the provision of services in Sri Lanka. Now this is talking about what? It is for provision of services in Sri Lanka, but only if activities of that nature, that means that service nature, continues for the same or a connected project for a period of 183 days, 183 days or more in any 12 months period. The provision of any service, the same thing if continues in 183 days or more in Sri Lanka, then it is considering as a SLPE. D, this is one of the really important provision and many of your examination this has tested. Therefore, knowing of this, and I will explain how this link to the case laws even. Therefore, this one is very important, which is under the SLPE definition. We will see what's the para D explained. A place in Sri Lanka where an agent performs any function. Agent performs any function on behalf of the business of whom lamai? Business of a non-resident person. Non-resident on behalf of a non-resident person, the resident person in Sri Lanka or maybe another non-resident person acting as an agent. For acting as an agent, if in Sri Lanka, if that non-resident person is earning any income, then it is considering as the source of payment. Come to this. Including in the case of an insurance business, the collection of premiums or the insurance of risk situated in Sri Lanka, but go for Roman 2, there is an exclusion for the agent. There are two kind of agent lamai. One is dependent agent, another one is independent agent. In this independent agent has excluded the two case law provisions relevant to, which is Anglo-Persian Oil Company and the Chiviers and Sons Limited versus CIR. These two, the Anglo-Persian is talking about the independent agent, and the Chiviers, that case law is talking about the dependent agent. This is very, very important. Come to this Roman 2 explanation. Excluding a case involving a general agent of independent status acting in the ordinary course of business as such. The independent agent doing his own business, as the part of his own business, he is doing the activities of the non-resident person. In that sense, he is the independent agent. He is the independent agent. Therefore, any income derived from any income derived by that non-resident person from this independent agent, it is not considering as the SLPE. Therefore, any income derived from in that nature, it shall not be considered as what? Source of payment. Clear? I will come to this again with the section 73. Subparagraph M, I will come to this again. Okay, please, this is a key point to remember when doing the non-resident taxation part. The definition of SLPE is really important. Okay, now we will go for the definitions. Now SLPE, you all know, we will look at what is this foreign PE, foreign permanent establishment. It also defined in section 195. It's very easy lamai. Now you all know what is the SLPE. It is the place of business. I will add it, a place of business which belongs to non-resident person situated in Sri Lanka. Now what is the foreign PE? Foreign PE is the place of a business which is situated outside Sri Lanka, but it belongs to whom? Resident person. Come to this. Foreign permanent establishment means a fixed place of business of a whom resident person. For a SLPE, where a non-resident person carries the business. See the difference. Situated in a foreign country. SLPE lamai, it is situated in Sri Lanka. Okay. Then foreign country where the business is conducted continuously for at least how many months? 6 months, but excludes any place at which only activities of the preparatory or ancillary nature are conducted. There is an exclusion here. In that exclusion, any place at which any activities of preparatory and the ancillary natures are conducted, it has excluded from the foreign permanent establishment definition. Clear? Now we all know what's the definitions for SLPE and the foreign permanent establishment. Okay. Before go for the next source of payment, we will go for this since it is really important to know. I thought it's good to summarize this SLPE and the foreign permanent establishment. We will come to that part very quickly and we will move to the next source of payment. Okay, now we will look at what is this definition SLPE and the foreign PE. Okay, we will come to this. I am taking it's a PE, permanent establishment, under section 195. Under section 195, there are two kind of PEs. Okay, there are two kinds of the PE. One is, I use the short form Sri Lankan permanent establishment, and second one is the foreign permanent establishment. Foreign permanent establishment. Okay, in that this is the first one, this is the second one. Under these two, what is the SLPE? This is the place of business, belongs to or owns to the, belonging to the non-resident person. Place of business belongs to the non-resident person, situated in where? Its place is situated in Sri Lanka. SLPE. Clear? Then I will explain this part first. Definition where? Defined in section 195. But I need to add a point here. Even this has defined in section 195, yes, it is correct. But when you are writing your answer in every time, when it comes to the permanent establishment, this is Sri Lankan permanent establishment, no? Then when it comes to the permanent establishment, you should need to look at what? Double taxation treaty, DTAA, double taxation avoidance agreement, particular article. Article 5 may be in China, Sri Lanka, it's Article 5. Likewise, you have to look at the article. In that definition of the permanent establishment article, it has given whether it is a branch, whether it is a provision of service, whether it's a construction site. When it comes to your answer, always you have to refer to the section 195 and the double taxation treaty. Why I am highlighting this one? Because in the section 75 subsection 2, it's very clearly given where if that in two countries, India for an example, India and Sri Lanka, if there are double taxation treaty, the double taxation treaty is superseding the Inland Revenue Act. Your every answer finalized should be recommended based on the double taxation treaty if there is a treaty between the tested country and the Sri Lanka and that other country which is tested in your paper. Clear? This is very important thing. Okay. Then after that, for PE, what are you, even under section 195, even under DTA, in the PE, what is the source of income you are going to look in for? Think this is just like a company. Then therefore you have to compute the business income, investment income, if there is any applicable other income. That's mean lamai, other than the employment income, all other three income included in this PE. What are the sources? Business income, investment income and other income. How to compute these things? Is it different from the non-resident to resident person? Is that a main deduction rule, disallowable expenses under section 10, the specific deduction is starting from section 12 to section 19, is it going to change? No, it is same. It is same. Then this is lot of students when it comes to this Sri Lankan permanent establishment and the business place of the non-resident person has tested, lot of people, the students think, how am I approached to the question? The approach is here. The approach is here. Is that clear? Okay, then this is the end of this part, which under the international taxation I will come to this one again. Okay, now we will come to the foreign permanent establishment. Here one thing, business income, investment income and other income. What are these? Again I am going to the section 4 as above income, which is sources of payment of non-resident person. The income arising in or derived in Sri Lanka. It is section 4, income arising in or derived from Sri Lanka. Clear? That part has done. Now come to this one, foreign permanent establishment. This is where PE belonging to, or PE belongs to a resident person. Resident person. That resident person belongs to resident person located. That PE has located resident person, we will add in Sri Lanka, but located in foreign country. Located in foreign country. How it has given? Section 195 definitions or interpretations. Interpretation done. Then for this one, what's your understanding? Now this part, okay, source of income should pay tax in Sri Lanka. Now think lamai, this is foreign PE. PE belongs to whom? Resident person. Then it's located in foreign country. Then this resident person, the receiving income from that, if the resident person receiving income from that foreign PE, then what is the tax treatment? Section 4, apply section 4. This resident person, for that his world income, the income from foreign PE should be included or not? Should be included, subject to, maybe exemptions are there, subject to exemptions, but the world income of the resident person, can you remember, wherever arise, it should be taxed in Sri Lanka. Therefore, any income derived from this foreign PE to this resident person shall be taxed in Sri Lanka. Clear? We will conclude like that. Shall pay tax in Sri Lanka for world income of that resident or for resident person. Resident person, again, if there is a foreign tax credit, if there is a foreign tax credit, FT, TC under section 80, if it is there, that should be deducted. That should be deducted if this foreign income has tax in that country and that foreign income has included in this resident person assessable income. Clear? Now the two angles we have looked into the foreign permanent establishment and the Sri Lankan permanent establishment. Okay, I think now the concept wise it is clear. Don't worry, after doing this theoretical part, I will take the Patrice question from all of these aspects without completing the international taxation part. I am not going to touch the Patrice question because I need to take the how the student should arrive to the final answer with the international taxation also. Then don't worry, I will do the questions with you all. Okay. Then after that, the fourth kind of the source of payment under section 73 subsection 1D, winnings from lottery, betting or gambling. Okay. Then from where you have touched this is in the investment income, winning from lottery, betting or gambling, and if this is doing as the way of the business, it is included in the business income if it is effectively connected to the business. Okay. We will come winnings from lottery, betting or gambling, that any kind of income relating to game of chance held in Sri Lanka. If a non-resident person has done one of these things and he has won that lottery prize, then whatever happened, then it is the he has received this due to it has held in Sri Lanka, thereby it is the source of payment of that non-resident person. Clear? Fifth one, natural resource payments, section 73 subsection 1E. Did you know about this natural resource payments before? Yes, where under section 7, investment income, one of the kind of the investment activity is a natural resource payment. See the link. It is linked to the source of payment. Not it has not came from one night. Ahasim path vela nayalama. It is in the act and therefore it's linked to the even for the non-resident person. Clear? Natural resource payments made in respect of or calculated by reference to natural resources taken from land or the sea situated within Sri Lanka or its territorial water. It should be, now you can see this word continuously. If these resources situated in Sri Lanka, even in the boundary line of the water, the sea area of us. Therefore, if a non-resident person earning income from that particular natural resource payments in Sri Lanka, it should be taxed in Sri Lanka. Okay, that's the fifth source of payment. Then we will go for the sixth one, rent. Section 73 subsection 1F, talking about the rent. In the rent, previously where you have learnt about the rent? In the investment income under section 7 as the part of the investment activity. Come to this. Rent paid for the use of right to use or forbearance from use in the assets situated in Sri Lanka. That means if a non-resident person, for an example, having an apartment in Sri Lanka, that apartment has given for the rent to conduct a business, in that particular non-resident person or individual is receiving a rent income, it should be taxed in Sri Lanka. Clear? Now, if you need to go for the definition of the rent, Lamai, it is in the section 195 of the Act. Then definition you can follow by section 195 of the Act. Okay. Then 7th one, premiums for general insurance paid to and proceeds from general insurance. Now, premiums from general insurance paid to a non-resident person and proceeds from general insurance. This is not talking about what insurance? Life insurance. This is general insurance. The accidents likewise, the general insurance are there. On that kind of the payment received to the non-resident person, it is liable to pay tax in Sri Lanka under the source of payment. Premiums for general insurance paid to and proceeds from general insurance, the two things talking about, paid by a person in respect of the insurance of any risk in Sri Lanka. For any risk in Sri Lanka, if it has paid, then it is the source of payment. Okay. Then this is the end of the talking about or a discussion of the the sources of payment or particular sources of payment up to section 73 1G. Then we will go to the next session of the discussion of the sources of payment. Okay. Thank you very much.